Good morning. It's Wednesday, October 2nd, about 6 a.m. Central Time. Overnight, the precious metals are slightly lower, but not a result of tensions dying down in the Middle East. This comes following Tuesday's safe haven buying. I believe that investors are really worried about two things. One thing no one's talking about is the potential supply disruptions from the port strike in the United States. What everyone is focused on is the increasing tensions in the Middle East. Iran launched around 200 ballistic missiles towards Israel yesterday, and those escalating geopolitical tensions took crude oil futures up more than 5% yesterday before settling with a 2.4% gain, just below $70 a barrel. So many of our clients have on the January $75-$80 call spread in crude oil. Not a recommendation to put that on now. We put that on in the previous weeks. We're going to want to reassess that trade here, see if there's an opportunity to lighten up here with this escalation and move higher in prices. So checking out a couple other things. Gold futures only up 0.9 of a basis point yesterday, settling at 26.90. So something to note, gold futures in the overnight session down $18 at 26.72. So we're going to scratch our head and figure out why that's going on. The volatility index jumped 15% to 1926. The dollar index, and that's your key, had caught a safe haven bid. So the inverse correlation, obviously, between the dollar and the gold market at certain periods of time, we see them safe haven bid together, and other times they work inversely correlated here. So the euro currency did sell off aggressively, breached 111. Dollar index caught that bid, and I think that's what put the cap on the gold market. Now, looking at a couple other things here, we did reduce our Bitcoin exposure on the news of that coming out, that this escalation was going to happen because of the fact that Bitcoin's high nature volatility and close correlation to the equity indexes. Oftentimes it trades with the NASDAQ futures. I read a report last night by Jesse Colombo, the Bubble report, and I really like this kind of information that is data-driven, visual, unbiased, and objective. That's what makes key good research in the commodities markets. Nothing with feelings, nothing with manipulation. No one's out to get you. Just go with the flow, Bruce Lee, be like water, and trade in that direction. So looking at some other things here, I was supposed to be on CNBC covering the silver market. They wanted to switch it to the copper market, and then last second, crude oil, obviously, because what's going on in the Middle East. Now, looking at the overnight price action again, December gold down $18, 26.72. That's a pretty big sell-off there in the gold market, and it could give us one of the next opportunities to re-enter into that trade. Some of the rotation might be occurring where people are seeing that, hey, gold futures and net long money managers have been excessively long in the gold market, and they've been underweight in the oil market, and there could be a rotation going on where they're selling some of their gold, they're buying some of that crude oil to gain that exposure. Remember, just a week or two ago, those money managers were net short for the first time on the crude oil market, and now they got to unwind that. Now they got a short cover, and now they want to position in that market. December silver trading within that $1 range I outlined yesterday. I think those are two important levels, 32.15 and 31.15. Nothing specifically on the charts. It's just because of the fact that we had an inside $1 range. Today we've got a 60-cent inside $1 range, and I believe that a break below or above will set the tone for the next direction in prices. Looking at the copper market, up 3.9 cents here at 462. We continue to add to that position with some of our clients here. And if you look at Chinese stocks listed on Hong Kong, they jumped the most in almost 2 years. So the cities are relaxing more home purchases rules. As much as 47% we're seeing property developers jump, and their index here is jumping 35%. So these are record intraday moves. That is going to fuel copper because copper is they are the number one consumer of copper out there, and they use copper in obviously everything. So looking at other things here coming out, we do have ADP coming out. That's going to be a mover and shaker at 7:15 a.m. Central Time. The expectations are for 124,000. Last week was 99,000. If you're a gold bull, you want to see that come in at the lower end of the range. You want to see no revisions to the previous month higher, and you want to see the number come in below the estimate there. We will have a couple Fed members speaking, and we will have crude oil inventories. They're expected on crude oil down 1.5 million. I don't know if that's going to move it too much, oil, as far as more. If you get a big build, perhaps we might see prices come off a bit, but I'd be more inclined to watch what's going on in the Middle East, and then also watch the OPEC meeting where they're supposed to address the September production and an outlook as far as guidance going forward. Now, the story that I mentioned, this port strike is kind of interesting. It's a strike of 50,000 members. There's uncertainty and concern is the availability of goods and their prices during the port strike. So remember, if you have these problems where we're not able to bring in additional materials, bring in concrete, steel, things like that, commodities, that the commodities that are located within the United States or just closely abroad on either side of the border should go up in value. What does that do? It pushes inflation upwards. What's that do? That pushes Fed expectations for larger interest rate cuts down. So we go to the CME's Fed Watch tool, a 65% chance that they only cut 25 basis points and a 35% chance that they only cut 50 basis points. So that was 50-50. Now it's more in the camp of 25. So gold futures need more accelerated interest rate cuts. They need the 50 basis point cuts, the larger ones, and we need to see a deeper cut down to the terminal rate. Does this raise the terminal rate? And terminal rate is where the Fed stops cutting interest rates. Was that 3 to 3.25, and now it's 3.75 to 4 because inflation is heating up? Is that what's weighing in the gold market? That's where a lot of the detective work comes in being just very anti-feeling and more just focusing on the forensic evidence that's out there to validate and allow you to risk manage your position properly. So if you guys got any questions, reach out to me. 312-858-7303. It's going to be an exciting day, I think, in these markets here again. Again, 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.